When you see the whole world shaking and you feel your heart is breaking, take my hand, no hesitating. When you're just so tired of trying, all alone you feel like hiding. Together we'll keep fighting. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains too high we can climb it. Feel this, we'll take in the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Can you see the sun is shining like a new hope? Feel it rising, coming over the horizon. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains too high we can climb it. Feel this, we'll take in the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. There's no stopping.
Good evening. It's June 25th. I'm recording this just about a half hour before it goes on. This way I can do a little bit more extra marketing. It's about going on 6:30 now. It was a beautiful, beautiful day. A little bit warmer than yesterday. But we went out to Buckrow Beach, hung out there for a little bit in the morning. We went to the farmer's market, and that's growing very nicely. And things are looking really good in good old Hampton, Virginia. I'm Chris Gajulo. I'm an associate broker for eXp Realty. And this is Real Estate with Mr. G, where we talk about current subjects and topics dealing with the real estate industry. Okay? And the biggest thing that's on especially buyers' minds is the rising mortgage rates, and they're a little shy right now at 6%, and that's a big jump from about a year ago when it was like 3% and maybe a little bit lower than 3%, but it was floating around there, and now we're dealing with getting close to 6%. So that's a topic on a lot of people's minds. I also believe if you have to buy, it's not going to get better as for mortgage rates. Home prices may stop escalating. And I have a couple of theories on that as well that I have already discussed in previous podcasts. But one thing we want to make sure is that once you get that pre-approval, or let's say a pre-qualification on your mortgage, okay, and your mortgage lender or bank, a bank loan officer or a mortgage loan officer, once they issue that pre-qualifying letter, you want to make sure that that works towards the end. Okay, typical closing, average 30, 35 days. Of course, this people who could do it faster. When I say people, I talk about closing companies, of course, if you're buying with cash, that goes faster. If you're doing a specialized program where you're a first-time home buyer and you're getting grants, it may take a little bit longer because there's these different webinars you have to take. But we usually close, when you look at the average, I would say about 30 days. And within those 30 days, you want to make sure you don't mess up things. Okay? So with that in mind, let me just give my little prelude of what we're going to talk about today, and then we'll go right into the matter. Okay. So you met with a mortgage loan officer, or you went to your bank, all right, where you have your deposits, your CDs, whatever, and they have pre-qualified you. You've given your bank statements. You've given them your pay stubs. They've ran your credit, and they say, okay. Now, based upon the appraisal of the house, that's part of the pre-approval method. We will give you this loan as of this moment. Okay. Now, sometimes they'll write a letter and they'll say, we just need to see some additional information pending on receiving this information. That happens a lot when you have extra income coming in, and it may not be from a source that it's documented, like a W-2 and pay stubs and so forth. It might be income coming in from rentals. It might be investment income. It may be, it could be things that really do not show up on a regular bank statement. Some will, okay. But if you're saying you're receiving rents from this house, you would have to show the deposits being made into the bank accounts and so forth. All right. But if you basically have if you are an employee and you're receiving a weekly statement, a weekly pay stub, or a biweekly pay stub, and you have all that, that's usually, and no other type of income that has to be verified. Once they verify your employment, you're pretty solid in getting that loan. As long as you don't do what we're going to discuss today, because a mortgage lender, a bank, will most likely check your credit a couple of days before closing. And they want to make sure that you have not taken on even more credit, or you have not purchased an item that would put you more into debt. Don't forget, the bank is looking your debt to income ratio. So how much income coming in, and how much debt you're paying out. All right. So as that debt gets higher and higher, especially if during those 30 days after being pre-qualified, you buy a big ticket item like a car, it may knock you out for the eligibility for that home. Okay, that's very serious and very important to know. And it doesn't even have to be a big purchase like a car. It could be the very expensive smart TV, ultra high definition smart TVs. They're 55-inch screen, and they're around $800 to $1,000, and you use the credit card to purchase it. Then it's going to increase your debt to income ratio, and you might have some issues. And I would even say not to even buy it with cash, because at times you need a certain amount of cash in your bank account to show that you vested into purchasing this home. So you don't want to really deplete that either. If you have tens of thousands of dollars, $100,000, then it's not a problem. Okay, but if you have $1,000 or $2,000 or $3,000 in savings, you want to have a good amount of money in your bank account. Okay, so let's look at our graphic. Let's bring that here. And I'm kind of off to the side. I kind of like that. I think I could make myself like a little circular thing. Okay, I think that's a little bit better. All right. So things to avoid after applying for a home loan. Okay, so now you have a cute little boy on top of his dad's shoulders. So once you apply for a mortgage or buy a home, there are some key things to keep in mind. While it's exciting to start thinking about moving in and decorating, be careful when it comes to making any big purchases. Here are a few things you might not realize you need to avoid after applying for your home loan. Now, this is a funny one here, or you think this would be a good thing. Maybe I shouldn't say the word funny. That's not my highlight button. This is my highlight button. Okay. Don't deposit large sums of cash. Now, you might say, well, if I have more money, Mr. G, you just said that, it's good to have a good cash position, with my statements. But if it's something out of the unusual, or is it out of the usual or out of the unusual? So let's say on a monthly basis, through your direct deposit payments, you show about $4,000 going in on a regular basis. Okay, they look at your statements, and they may go back 6 months, they may go back a year, and they'll see, okay, he gets paid approximately $4,000 a month, and we see that. But now all of a sudden we see these other big deposits after, again, that we qualify, and we're going, what's going on here? All right. And especially, I would say, again, in a situation where you may not have such a great cash position, and all of a sudden you have this big money come in. So they're going to question that. All right, where is that coming from? We want to make sure that you, the applicant, could purchase this house, that you don't need help from other sources. Okay? And like I said, it sounds like it would be a great thing to have a large amount of monies, but they're going to question that. Where is it coming from? Is it possible that once we close on this loan, you will have difficulty making payments to your monthly mortgage payments without additional help, for instance, like these deposits? Okay, so you don't want that to happen. If it happens, they're going to ask where it's from. You may need a letter, but it's something you would try to avoid for that month that you're in the process of closing on a home. And this is the big one where a lot of people don't make any large purchases. All right. So Again, people with new debt have high debt to income ratios. How much debt you have compared to your monthly income. All right, since higher ratios will make it for riskier loans, you may no longer be qualified for that mortgage. So don't make any large purchases. And I would say both on credit and if you're paying for it in cash, especially, again, you want to have a certain amount of money in the bank and you don't want to go lower than that threshold. Whatever your mortgage banker says what you need to have. Here's a biggie. Don't co-sign loans for anyone, all right? Because that actually adds then to what you have to repay. Even though the primary borrower will hopefully be making their monthly payments on it. But when you co-sign, at the very first missed payment from the primary borrower, they have the right to go and ask you for it. And you are responsible for keeping that loan, if it's a car loan, to keep it valid and current. So even if you think, well, I'm just a backup, in case the primary borrower, it could be a daughter, it could be a son, it could be a brother, but you are responsible for that loan, even though you're not the primary person on it. They have the right, without need to go to court or anything, to ask you for payment. All right. Here's another one. Don't switch bank accounts. Keep the same bank accounts that you have. All right, because the lenders want to track and source and track your assets. And if you're going to switch bank accounts, it's going to be more difficult for them to track your assets. And then it raises a red flag. Why are they doing that now? Why are they changing banks? And what's the reason behind that? Just leave it as it is. Even if you hate your bank that you put your money in, wait till you close. Don't apply for new credit, all right? It doesn't matter whether it's a new credit card or new car. When you have your credit report run by organizations in multiple financial channels, it will have an impact on your FICO score. Lower credit scores can determine your mortgage interest rate and possibly even your eligibility for approval. Okay? When you apply for, one credit card, that's okay. If you're during that month, don't apply for anything. But applying for credit cards, because it's not positive credit, okay? Because it's something that you could end up and go overboard with. Searching for mortgages and getting a rate, it's not as bad because banks or the credit reporting agencies see that as good credit. You're buying a house, and most likely it will increase in value. You could borrow against that, but it increases your self wealth. Okay, we're going to see a little video on that once we're finished with this. So don't apply for any new credit during that time period. And actually, because don't close any accounts. And I know that sounds weird because you think, well, if I'm closing a credit card, they know that I'm not going to take out any more money with this credit card. I'm not going to buy any more items. So that should be a good thing. But right off the bat, it's not good. Because it tells the credit companies or the credit reporting agencies that you might be having difficulties, and that's why you're closing it. And they want to see long credit, longevity in credit. Okay, many buyers believe having less available credit makes them less risky and more likely to be approved. Kind of makes sense, right? But it just isn't true. A major component of your score is your length and depth of credit history, as opposed to just your payment history, and your total usage of credit as a percentage of available credit. Closing accounts has a negative impact on both of these aspects of your score. All right, so not only do they look at your payment history, that you're paying on time, but they also look at the length and the depth of your credit history. All right, so closing accounts in most cases is not a good thing, and you just have to wait. Another thing that's up here, or that's not up here, that I want to bring up, because actually my daughter was going through something. Do not switch jobs during that 30-month, during that 30-day period. Don't switch your jobs, even if you hate your job. If you get fired, that's something else, right? Okay, let me get me back here. Stop the sharing. I mean, again, if you get fired, that's something else, and that's going to be an issue too, because during that course of time, they're going to send out a letter. It's called verification of employment, and they want to make sure that you're working there. Even if you gave them pay stubs, you might have been fired, right? So, like I said, being fired is something that you know, if it's going to happen, it's going to happen. You can't avoid it. But don't voluntarily switch jobs within that 30 days, because your approval of that mortgage is based upon your income, and it's very possible that you'll be taking but your other job may be paying you less, right? Or it may be a commission job and not a base salary job. That's a big difference. With commission jobs, you need 2 years of showing steady income coming in. It's not saying, well, I mean, I'm a real estate associate broker. I have to show, if I'm going to purchase the next house, 2 years of income statements that I'm making a steady flow of income from my real estate business. It can't be, okay, I'm at this new job. They're paying me $60,000 a year. Here's a letter from my human resources department to prove it. It's not like that in a commission job. So again, do not change jobs during that 30-day period. I mean, wait till after you're closed. All right, to do a move like that. Okay. One thing I did want to go over also is that, well, since I brought it up already, we're going to watch the video on home appreciation, right? When you buy your home, most likely in most situations, it does go up. All right. And that increases your own self-worth. All right. Which are good things. That's why it's good to buy real estate. So watch this now. Okay. So, especially within the last year where home prices went up about 18% to 21%, you had definitely a big increase in your equity, and that's wealth to you. All right, that's why if you're in a renting position, and you have a good income, um, you should definitely, and your credit is in order. And if it's not in order, get it in order. But there's so much power in owning a home as opposed to renting. All right, and then let me show my nice little. These just came out about 2 weeks ago. That's the things to consider when buying a home. That's the summer edition. These guides come out 4 times a year. So the summer one just came out. And we also have the things to consider when selling your house. All right. And you read these things, and then it's not for you to do it on your own, right? To buy or sell. Then you call a person like Chris Gargiulo, Mr. G, to help you assist you with your purchasing and or your selling. Okay. And you'll say, where do I get these wonderful things that and do I have to pay for them? No, you don't have to pay for them. You go to, and let me get up here. It's my blog site, realestateWithMrG.blog/resource-materials. Now, you don't have to remember that. You could just go to my blog site, realestateWithMrG.blog, and you'll see the menu bar, and you click on the link resource materials. It'll take you right there, and you could download them for free. Okay, no cost. Okay. All right. So I hear from I think we have some repeat guests in our audience. They were here a couple of months ago, and they decided to come back. And they are a real treat. William will talk about them right now. My producer, William.
Chris, great news. We have 5 celebrity musicians in the audience. Coming out of Lou Prima's band in the early 1950s, they developed a one-of-a-kind novelty act, playing their instruments while on pogo sticks or hanging upside down from a trapeze. Their musical style was swing, bebop, often with all 5 members singing, harmonizing together. Ladies and gentlemen, the Goofers.
Well, it was great seeing them again. So that's it for today's podcast. And next weekend is 4th of July weekend. Yay! The official beginning of summer, I guess, especially with the famous movie Jaws. That's when people go out to the island on 4th of July weekend to start the summer vacation. So schools are out here. I think this was the last week for my grandchildren up in New York State. So summer is here, and nice weather and swimming and picnics and going to the beach and to the pools. And I hope everybody is enjoying it. But in the meantime, you want real estate, you call me. Please do so. Contact me. You're going to see my information in the credits. So be kind to each other, and remember, the greatest power we have is to love, and the greatest gift, each other. Okay, I'll see you next week.